learned from the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your watch list coming in on February 24th, 2022, and it's time to protect your portfolio. Today was a lot worse than yesterday. Literally anything that could have gone wrong happened, and one of those was the key levels, and actually after hours, we went a little bit lower. So yes, that means that wave 3, you might be able to say it started. We're going to talk about it, but today was crazy. There was a lot of different things on the board, but now we need to talk about wave 3. If the market goes lower leading into the Fed, what can you do? A lot of people have been asking about the butterflies, so I want to go over a couple plays, but I will explain the butterfly, and we will talk about how you could get 20 times hedge protection. Now, I will tell you this, as the volatility increases and put premiums go up, it does start to change the odds a lot, but we are going to talk about it. So I got the plays for you. I got the keys. We're going to talk about everything that happened, and then how we're setting up for the rest of the week, how we're going to protect the portfolio, and then the other ranges that you need to watch. So drop your thumbs up on the video and make sure you are subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, and big support and love if you've been showing support. But right off the bat, like I said, everything that possibly could have went wrong today, it did. And I'm going to start with the most important thing, and that is the Fed futures. Literally, even though we've been getting a lot of bond action, there was no safe haven bid on bonds today. They sold off. We were looking at it a lot on stream, but on top of that now, the amount of hikes priced in, that started to creep up a little bit, and that's kind of odd because the last couple days when things have been chilling out, the Fed futures have actually calmed down. And if you want to know why things are getting a little bit weird, because everything going on now with Russia, Ukraine, inflation, all of that, a lot of people are talking about oil and commodities, and really, that's your first pretty picture here. We're going to get into it and what's going on with nickel, but essentially, if the commodity prices get too high, it actually increases the justification to raise rates, because higher commodity prices would lead to a lot higher inflation. So that was the first thing that happened today, and then on top of it, we got more sanctions later in the day, but even then, we opened up the morning with Ukraine starting a 30-day state of emergency, and then there was confirmed cyber attacks on all of their Ukraine government sites, and that was all in the morning. Then we announced more sanctions, or a little bit of an addition to what we announced yesterday, and then on top of that, the market broke every single key level and went straight down to the lows of January. So today really wasn't that crazy as far as, quote unquote, what happened. It was just a matter of how it played off, and believe it or not, we actually gapped up. People were excited that the sanctions yesterday weren't that aggressive, and they took that as bullish, but then we sold off very quick as just one thing after the next. It just did not get any better at all, and then now those levels, it is really putting a test on investor sentiment. So coming into the first pretty picture here, we already talked about it again. You need to keep your eyes on commodities, oil, gold, whether it's investment gold or even anything from silver, aluminum, copper. All of these are going crazy. It relates to Ukraine. It relates to China. But on top of it, though, this is going to relate to inflation. So as you can see here, in literally the last 30 or so days, every single Russia headline, it has drawn nickel up a ton every single time. And we even have a couple of more pieces of news to talk about today. But essentially, commodities are getting hot, and a lot of people are watching this as the tensions unfold. So that's the first pretty picture. And now coming into a little bit of market sentiment, this is showing you the market breadth. And essentially right now, you are sitting at about 30% of companies trading above their 200-day moving average. That means about 68%, I think, something around there, are trading below their 200-day moving average. So literally, what this is telling you is that more stocks are down than not. But if you want to apply it to right now, one, this is one of the lowest points we've been at as far as breadth, meaning most of the market is down in the last year, and now in the last month it hit a low, and then here's where it gets good. There's still a little bit of gap before market breadth starts to signal a buying opportunity. So essentially, if market breadth comes down to 20 and you got 80% of stocks trading below their 200-day moving average, that is actually a hedge fund long-term buy signal. And then anything above 70, which we were, was actually a sign of strength, ironically. So keep that in mind, but we've been talking about it again. Investor sentiment right now and all the attitude and emotions, it is really having a real big impact. And that's why if we start wave 3, we go any lower, the tensions get any worse, it is really going to create a different scenario. And really, it's showing you all of the pressure that is mounting on the market. So getting into the good part, man, we've already talked about this. And honestly, with the after hours move, you can say that wave 3 has started. This is what we were talking about. I have been waiting for the bounce, and I still kind of believe in it a little bit. So I'm going to give it a little bit of a margin of error, meaning we may be able to go a little bit below 421. But essentially, what we saw today, if the momentum continues and we keep flushing, that is your wave 3. And now on top of that, what are going to be the next support levels? Again, people are asking me, where are you getting these numbers from? It is just based off of levels that we've been at. Basic support and resistance is not too crazy technical, but it is trying to understand the momentum and what prices the market was willing to buy during certain periods. So to give you a better visual of that, if we come to the chart, really, this is that next level that we were at in June. Again, we had a little bit of volatility with all the inflation. This was when the SPY was at 420, and then it started to rip afterwards. But again, right here, we had that gap down from 422 all the way to 417, and then 415 was the lower end. But pretty much in the last almost a year, this is really your only other support level. That's why this was so big. And again, the fact that we are breaking below this low candle, it's showing you the market is panicking more or willing to sell a lower price on the SPY than it was at the beginning of January. And January had a lot of new information, just a lack of Russia conflict. So very interesting here. But now this is going to be the next range. If we do keep flushing, we will see. If the next few days slow down and it doesn't really like flush, you still may see the bounce materialize, and then we're going to see if that looks like 2018, 2019. But for the most part now, all hands on deck, because it could go either way and it could get crazy. So watch out for that. We talked about this a little bit yesterday and even today, but I'll tell you right now, usually, and especially after seeing this reaction, the fears are usually worse than the news. And I'll tell you here, you should probably buy the invasion, but don't forget about the Fed. So yes, we are reacting to the Russian news, and essentially what I'm trying to say with this is that you are moving big right now, and there's a high chance that leading into it, we probably sell off more. And then once there's like a big shift or occupation, chances are the market may chill out for a little bit. But now that's why I say don't forget the Fed, because one, that's the most important thing right now. And then history shows us some other times where, yes, usually the invasions are quite bullish. I have a pretty picture for you, but at the same time, the 6-month time frame or even a little bit afterwards, it still could bring some volatility. So keep that in mind. But like I'm saying, do not forget the Fed. That is going to be the real driver of markets in the next couple weeks here. But the thing going on with Ukraine, it is just not going to help any of the data. If commodities go crazy, if oil and all of that happens, it is literally going to impact the Fed and how they want to act, because it will get reflected in the data in the mid to long term. So keep that in mind. But now coming into the pretty picture, here is the chart. I wanted to show you this, but this is why you should buy the invasion. So essentially 5 out of 5 times before a quote unquote invasion, you actually got a little bit of movement. So 1964, Gulf of Tonkin and Vietnam, you can see there was a little bit of volatility prior to it. And then once there was an invasion, a little drop, and then it ended up going. But this is what I want you to notice. Usually there's a little bit more volatility that follows up. So just keep that in mind. Usually tensions are high. But again, you see that with the Vietnam War. Then you have the Gulf War in 1991. Market got clapped leading up into it. That's reacting to the news. And then once there was the invasion, the market started to go up again. Again, a little bit more volatility. The Afghanistan War, this is the unique one where, yes, it went up after any sort of invasion, but then it didn't end up going down. And this one's a little bit more modern. But come to Iraqi War again in 01, we were down in the gutters before, then it led to a run up. I don't know if you could see that. And then finally 2014 in Korea, Crimea, you had a lot of volatility leading up to it, and then once Russia began the occupation, the market went up. It was a little more volatile, but what the chart doesn't show you, it did end up coming down quite a bit because of the oil and sanctions and everything that followed up. So keep this in mind, but essentially what I'm trying to tell you, we are going through a lot of pain before any of the bigger events happen. So depending on the news that we get, it may end up being a little bullish. So we will see what happens. But coming into the company news and events, the first piece of news, again, this was big in the morning, but there were cyber attacks on the Ukraine government websites and banks. That was confirmed. There was a couple of news pieces about an attack here or attack there. So really, it's all about what we get in the morning and then what does get confirmed. But that was part of it. And on top of it, like we said, Ukraine did announce a state of emergency for the next 30 days. So there was that. And then after hours, this may be the next step of escalation by Russia, but this one's very important. But Moscow, the Russian government, they said they got a letter today that the separatists are asking Putin to help them fight Ukraine. So essentially, if they agree to help out the separatists, it would open a way for Moscow to deploy a lot more troops over there, and this would definitely be seen as a big sign of escalation or aggression. So it's a little contradicting and confusion because he's helping people out, but this goes to show why Putin made that move that he did and why we reacted like we did a couple of days ago. So keep that one in mind. We're definitely going to hear about that one tomorrow. And then earlier today, I think this one is absolutely nuts, but the White House is talking about releasing more oil from the SPR. So they're trying to get ahead of the Ukraine situation. They know energy will get affected, but now they are doing what they did a couple of months ago before Omicron. And this is what I want you to keep in mind. One, we have not done oil release like this back to back ever in history. That's one thing to know. But on top of that, just remember, it usually leads to a higher price of oil in the mid to long term. But now on top of that, again, the other point to know is that before the White House ever released from the SPR, they did start a jawboning campaign, and they were really talking about it a couple of weeks before to kind of bring the price down. So that news came out. That means they're talking about it. We'll probably get an action in a couple of weeks, but keep your eye out for that in any of the other oil news. And then Trudeau, he has repealed the Emergency Power Acts, and it kind of could relate to some plays here. We'll talk about it. It was especially weird because he extended them a couple of days ago. So this is kind of good. We'll see if there's any other repercussions, but kind of a positive update. And then finally, Fed Dolly, she said that she backs a March rate hike absent of a big negative surprise in data. And again, everything going on with Russia, Ukraine, that is what could affect the data. So like we said, another day, another drama. It is all about Russia and Ukraine. We still got the Fed, but now the real question is, what does the market do? What is investor sentiment like? And how do we position before the big event? So I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I got 3 or 4 stocks that I'm looking at coming into tomorrow. We'll go over the plays that I made today, but I need to talk about the butterfly. So the butterfly is the option strategy, and this is how you could get about 10 to 20% protection, aka return on your money, but it is a very volatile play. So I got 2 different butterflies, and we're going to go over it, and really, I'm just going to talk about spreads and to understand this trade, but realistically speaking, I've already been talking to people about it. I really like this strategy. This is the reason why we have brought it up, and I'm even going to show you the fun fact with it. Literally, if you bought a SPY put the same time we bought the butterfly, you would have actually made more money by buying the butterfly. The reason why we brought it up, because I saw it as a unique strategy in this sort of, up and down bumpy environment. So that's the reason why we want it, because we were getting a lot of that whipsaw volatility, but you have to understand it is a low probability play. And on top of that, if you don't understand spreads, it can leave you in a weird position where we've seen it in the past. The reason why I'm being so specific about this is because literally anytime I start doing spreads, the questions start rolling in, and it's shortly after people are like, wait, Robinhood said I owe him $20 million. Why do I need 80,000 margin required? I don't get it, Josh. So there's a lot of things, and I want to cover it and make sure you do it. The best thing you could do is play it small or paper trade it until you find it out, but understand it is risky, and going after this strategy, I mean, it is going to require a little bit more, and you got to understand what you're getting into. So again, none of this is a recommendation. I'm sure a lot of you have been seeing me get clapped. You know what's going to happen. You got to be careful out there. I want to expose you to the tools. I want you to be able to see what happens. But again, don't wind up in one of these situations where you're freaking out because you do not understand the option strategy fully. So with that out the way, we have two different butterflies. The first one, I spent about $500, and the max gain on this play is about $20,000. Yes, $20,000 is the total return that we can make, but what needs to happen? We need this SPY at 360 by April. It has to be in that range, and we're going to talk about it, but that plays up 96%, and then we did another one, and I had to put it on the Robinhood, and here's the reason why, because if I do these butterflies and I grab another option and then they correlate at the same prices, essentially, I would have ended up messing with it, because the other one, I bought a 380, but now on this one, I didn't know if I showed you. Here it is. So here's the gain, 80%, but essentially, I got to throw it up here so I can scroll down a little bit more, but literally, I had to sell the 380, so if I bought it on the other one, it would have conflicted. So essentially, if you're being like, Josh, I don't know what that means, what I'm trying to tell you is if you're going to put a butterfly at one of these ranges on a certain expiration date, unless you got two different brokerages, you're really only going to get one shot to do it. Otherwise, the overlap will really mess things up, and I strongly recommend that you do not have any overlap. So essentially, I would not do both of these trades on the same sort of brokerage because it would mess up the ratio, balance requirements, margin, all of that. So keep that one in mind. The next thing you have to understand when you do a butterfly, the main thing that you are looking for, the contract that you sell, the one that you short, the middle part of the body. Again, we've talked about this before, but literally, if you want to do this trade, you'll see, I mean, if we go up here, there should be wings. Where are the wings? I feel like I sounded like Trump right there, but essentially, you could see here, this is why they call it the butterfly. This is the body, and these are the wings. But if you were trying to say, okay, how can I make the best play? The thing about the butterfly, it's not about guessing the direction. It is literally about guessing the price. So you have to be able to say, I think this SPY or whatever play is going to be, I think it's going to end at this price, and you make max gain at wherever you sell the middle. So this is important because essentially if we start wave 3, the market's going down, you're like, okay, I think this SPY could go to this, and we're even going to talk about it. I'm looking at some for the upside. It is your job to pick the price you think it's going to go to, and then on top of that now, the next thing you got to keep in mind is make sure the ratios are always equal. So if these contracts are $20 apart, make sure the other contract is $20 apart. You can do a quote-unquote broken wing, but for beginners or if you don't understand it, the best, safest way is to keep them all even and matched up. So hang with me. Again, I'm trying to drop a lot of the different questions I receive and answer it all. I haven't got to the good stuff with it, but one more thing, a lot of people are saying, okay, how the hell do I close these out? You were able to get the trade, literally click all of the options that you have, and that's why it's easy if you don't overlap any of them, and then right click, create closing order, and then boom, it gives you a price, and you should be getting back a credit and not a debit, and then it'll close them out, and then you're able to adjust them. As you can see here, there's like a 6-cent spread, so not too bad, but that is how you would close it if it was on Robinhood. If you did the trade at once, you should be good to go, and it should all show up as once. Again, here, all I got to do is close. It says we have 3 of them, so you would just do 3, and then close them out at 160, and then you are good to go. So hopefully that answers some questions if you did one of these in the last couple days. And now, what I want you to understand, if you really want to do this play, all you need to understand is a basic debit spread. That's literally all it is. So if you look at these first 2 plays right here, we bought a 400 SPY put, and then I shorted a 380. This is the main gist of the play. The thing that messes it up is the ratios, because I bought 3 here and I sold 6 here. Essentially, if you did 3 and 3, this would have been a normal debit spread. So if you don't know what a debit spread is, you buy an option and and then you sell a worse option further out the money, but you short that option so that it could help pay for this option. And then theoretically, if the contracts are matched up 3 and 3, it caps your gain, but it makes it cheaper to get into the play. That is a normal debit spread. The problem with the butterfly now is since you're selling more contracts than you're buying, you will need collateral to make up for the difference. So it would either require a lot of cash up front, but since this is a defined risk trade, again, you could only lose what you put in. Granted, there is no assignments or anything crazy that could happen, and sadly, it really can happen like that. We've seen the craziest stories, so you got to be careful. But now, since you're selling 6, you have a higher margin requirement. You are only buying these contracts to get rid of the margin requirement and to protect you from a max loss. That's it. That's why if the SPY ends up shooting down to 360, we would actually lose money, because then we would be losing money on these puts, even though we're making money on these puts. But since we bought these puts to account for the ones that we are losing on here, it would balance out if you add up the gain. So I know it might sound confusing, but I want you to understand this. And best of all, we have a bunch of tutorials. Go look the Trading Fraternity Butterfly or search the Trading Fraternity debit spreads. But that's the main thing I want to talk about here, is that it is literally just a debit spread with one extra step. And then on top of that, like we already discussed, this is the hardest part for a lot of people to understand. The difference between a debit spread and the butterfly: if this was a debit spread and it went to 400, you would be making money and you would get your max gain again if it expired right here, or even if you were a little bit in the money. But now in this case, since you bought contracts here, you make most of the money at the one that you sell. So it's kind of similar, but that's really what you got to understand, is that essentially when you are placing the butterfly wherever you think the stock, the index, or whatever, wherever you think it's going to go, place the middle and the short sell where you think it's going to go. So if you think the SPY is going to go to 400, you actually wouldn't buy this play, because you're buying the 400 and then selling the 380. This is going to make max gain at 380, not at 400. So if that was the case, you would have wanted to move this play about $20 higher. So hopefully that makes sense. And again, you got to be very careful with these plays. If you have any questions, come on stream. We were going through a couple of them today, but the real thing you need to understand, and what we talked about, why is this an ideal strategy? It is not ideal because of the low probability, but why it's good, you can see as we get to the dark green, because essentially the lower the SPY goes over time, that is where we make money. So even if this SPY kind of dropped fast like we discussed, you really wouldn't be making too much. But then over time, come middle of March, late March, if the SPY starts to come down, this is where we actually start to make a lot more money. If we're anywhere around those strikes and it happens later rather than sooner, you could see here you will make substantially more money. And this is where the protection comes in if there is a lot of volatility. And so you could understand it, and what we're going to be watching, the main idea is that you want one of the puts to expire. Essentially, we make money by this put going in the money and gaining value. This one, if it ends by April at 380, these expire and so do these, but then we collect the premium from shorting them plus getting the $20 in the money right there. So that's what to understand. Again, it's very unique in this volatility. And then the final part, again, go check the dates. We got puts on February 16th for these, and I got the other ones around February 11th. But this is where it gets interesting, because the market was higher, but notice this butterfly is up 80%. If you come over here to the SPY put, you would actually be making 5% more with the butterfly, which was interesting. And most of the day, these things were actually pretty clap, believe it or not. So that's the thing about it. It has actually, even though it's low probability, it has been working pretty well. So hopefully that helps. If you have any questions, again, come on stream. But back to the rest of the plays. As far as tomorrow, the first play I'm going to be eyeing is Facebook. They dropped below $200 today, and that is a key level. We've been talking about it, and I did bring it up yesterday. I had that little window. It was able to shoot up this morning up 2%. So I got the puts. I only put like $120 and made them free. It came down, so I'm holding one of them. I sold some of my June puts, but now that big leap I had from a while ago, I got like a $6,000 put that is actually positive again. So riding that one out, but I'm going to be eyeing a lot of short-term plays here on Facebook, I think at this level it could be very, very good. So as far as the play, I grabbed these in the morning. Again, like I said yesterday, I was like, if there's any bounce, the weekly premium will get crushed. These plays were down at like 60 cents. I grabbed two of them here early in the morning. They shot up. I didn't take profits. Then once they got to like $1.20, I sold one out at 125, got my initial investment back, and now we got a free weekly on Facebook for the rest of the week. So we will see what happens with that, but that is the first play. And now coming into this second play, this should make a little bit more sense. I am going to be looking for butterflies on the upside. So if we get any of that wave 3, or if it starts to look like 2018 and we do get that bounce, I'm going to be looking for some play around like 450. I ran some numbers today, but it wasn't that good, and I forgot to mention it with the butterfly. What you got to watch out for with any of these butterflies is that the price you pay, it really changes the risk to reward. So if you wanted to copy any of the butterflies that we did already, since you would be paying 100% more, that means you're getting a worse risk to reward on the back end. So that's what you got to keep in mind, because pretty much I liked a couple of the plays, but they were like $30 to make 300, so it was essentially 1,000%, but I'm looking for more 2,000% if I'm going to be taking a crazy butterfly type trade. So keep that one in mind, but I'm going to be looking for some butterflies for the upside. And then Yandex, we got to play on this one yesterday. This is like the Russian Google, but the chain does not go deep on March. We're up almost 100%. It depends on the bid and ask, but essentially, if they add more plays to that chain or it gets a lot of this volatility, some of the weeklies will be good, but it might be good for both ways. If we get any sort of Russia bounce, Yandex can move, and the option chain is very, very weird. And then finally, RY, Royal Bank of Canada, just Canada 10, man. Again, the Trudeau action was a little bit weird, but some people are talking about some of the fallout from some of the banks that have been restricting accounts there in Canada. A lot of stuff, so I was like, all right, maybe I'll take a look at this tomorrow. I have no plays, but we will see what happens. As far as everything else, I didn't make any other plays. I closed out of the Facebook Junes. Remember, I got that one after earnings. That was 50%, and then I panicked on Tesla. I had that March. It was up 200% yesterday. It opened up only up like 100%, so I said, okay, we got the weekly yesterday, so I took about like $800, $1,000 profit on that one, walked out of that one, and then the play that I got yesterday, those Tesla puts, they're up about 200, and then even the Altrias, I believe they're holding up as well too. So these are going to be some key ones that I'm going to be watching tomorrow. Yandex, like we said, watch out for gold. And what I brought up today is if we witness any day where gold goes down, oil, healthcare, any of the defensive names, and even bonds and all the safe havens sell off, that is what real liquidation will look like, and that will actually tell you there's a lot of panic. So watch out for that, but I'm definitely keeping my eye on GLD, even LMT if it goes up. As you can see here, there is a couple of names that did good today, even XOM surprisingly after that news, but watch for some of the job owning campaign against oil, but watch all those. Boeing, they dropped. They even got some like 5G news today that wasn't good, but the premiums really clapped from yesterday. They held the same price, but they were down a lot at one point this morning, so watch out for that. Royal Bank of Canada, again, with all that tin, I'm going to be watching Apple. They're falling from safe haven levels, so this is a key level. If they get any crazier from here, it could have a very big reaction, so I'm going to be watching out for that. Ford, they're dropping below. I cut that other play, but this one might be good. I may look for some shorter term plays, but going to keep my eye on there. And then the CEO had a lot of comments today on profitability and whatnot, so watch out for them. And even Amazon, some people brought this up, and I'm really going to be watching this. Essentially, Amazon might have some good butterflies. Pretty much it's $800 to make $10,000 if you want to make a little bit bigger of a bet. So we'll see how that plays out, but watch out for Amazon. Definitely watching them. And Abivai, MO, and some of the defensive, even Alcoa, like we said, there's some names that were doing good before. They are still able to do good, but like we saw today, even when the market was selling off, literally MO would start to rip. So just keep your eyes out for this. This is what I'm going to be watching. There is still some winners, and we have those plays, so just watch out for that. And finally, TLT and the dollar. The bad part about today is that the bonds sold off. That shouldn't have happened. Lately, we've been watching the divergence close while bonds went up, but as you see here, this just widens the divergence even more. So Very interesting. We'll see what the next few days provide, but essentially, if Fed futures and the bonds keep getting worse while the news gets worse, that is not going to be a good sign. And really, the question is, do we converge before or after the Fed? And either way, that creates a crazy situation. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need you to remember, treat the small things like they're big, baby. But the code loves you. I love you. I'm going to see you in the morning. Let's go.